One of the most exciting developments within the blockchain space is the coming of the decentralized financial system, or the DeFi space. In this new system, we'll be able to see censorship-resistant financial services, while we retain full control of our wealth and personal data. These financial tools will be open and permissionless. An internet connection will be the only prerequisite to accessing them rather than geography or circumstance. So DeFi is great, but how do we get into it today? Where can we find opportunities that exist, and how can we partake in them? Let's spend this video discussing DeFi and some of the different ways we can earn passive income using it, which will put us in a very good position as the market matures. Welcome to Ready Set Crypto. This is your brain on blockchain. So, financial services are the crux of any economy. They enable individuals to exchange value, store wealth, and take on credit. Debit cards, credit cards, and digital banking applications allow us to spend money on goods and services. Bank accounts allow us to save money and earn interest on those savings. And loans give individuals and businesses access to capital so the economy can grow at a faster rate. So there's no surprise that the financial services industry makes up a great deal of the world's economy. In the US alone, the gross output of the financial and insurance market makes up about 7.5% of the US GDP. But despite playing such an integral role, the financial services industry is rife with problems. Many of the problems that plague the financial services industry stem from the fact that the financial services are controlled and supplied by a central party. The primary pitfalls of centralized financial services include unequal access, censorship, counterparty risk, and a lack of transparency. One of the things that's motivated me being a part of the crypto industry is that according to the World Bank, 2 billion people worldwide do not have access to a bank account or any financial institution. In regions like Africa, the Middle East, and parts of Asia, it often doesn't make sense for banks to service the population because of low income levels, lack of financial literacy, and a small overall market. This leaves people with a slew of disadvantages, and it's been referred to as the geographic lottery. The result has been widespread stagnation in economic development and societal progression as citizens of these countries are unable to store wealth, send money, and build a financial history. Centralized financial entities are also prone to censorship. Payment service providers are a great example, as they have the ability to exclude individuals from sending and receiving money. You might remember a time in which WikiLeaks was blocked by Visa, MasterCard, and PayPal in their ability to receive donations, which in turn, ironically, promoted the use and proliferation of Bitcoin in 2011, something that Satoshi Nakamoto definitely was not keen about, but also acknowledged the necessity of it. I think the advancements of the blockchain industry over the past decade have really set the stage for what's to come in terms of decentralized finance, or DeFi. From the offset, it was clear that software would eat some aspects of the financial industry. Finance today operates through a handful of powerful intermediaries who can extract rent for providing services that can just as easily be delegated to code. Historically, the largest obstacle to digitizing most financial processes is creating trust in digital environments. There's a big question of how we can know that a digital transaction is valid without a central party verifying key elements of the exchange. So this is where we introduce a new digital currency. Not one that you can trade, but rather one that forms the basis of this new system: trust. By digitizing trust, we enable users to store and transfer wealth, as well as take out loans without the need of an intermediary. To sum it up, blockchain-based financial services are superior to their centralized counterparts across 5 primary features. The first is that it's permissionless. Anyone is able to access decentralized financial networks through an internet connection. No individual is denied service based on who they are, where they were born, or how much money they have, for example. The second piece is that it's censorship resistant. There's no central party able to reverse the order of transactions and deem a validated transaction invalid at some later point in time. Furthermore, a central party can't turn off the service. Anyone with access can use a decentralized network because they are the decentralized network. The third point is that it's trustless. Users don't have to trust a central party to ensure that transactions are valid. The fourth is that it's transparent. Public blockchains are completely transparent and auditable. All aspects of a financial exchange are made available. The last piece is that it's programmable. Developers can create and intertwine financial services at a very low cost. Plug-and-play architecture helps compound the power of these services. So now that we've kind of covered at a high level what DeFi is and what it represents and what it's trying to do, let's briefly look at a list of different financial primitives currently being built out. Each one of these aims to be a 10 times improvement across access, censorship resistance, cost effectiveness, and transparency. While this list is not exhaustive, it should give you an idea as to how fast the space is evolving and provide a glimpse into what a more open financial world will look like. So the first is scalable payments. And the reason I have to mention this is that Bitcoin and Ethereum in their current state are relatively inefficient at being both fast and cheap payment networks. Now, we're still in the early days for the quest to solve scalable on-chain payments. There's a number of potential solutions, but the community has largely shifted focus to Layer 2 as the best way to scale blockchains. The primary benefit of Layer 2 solutions is that they move a great deal of network activity off-chain and only rely on the main chain for trust enforcement and arbitration. If successful, Layer 2 solutions will drastically decrease on-chain transaction bloat while allowing the network to retain a high level of decentralization. The two most promising solutions, the Lightning Network for Bitcoin and state channels for Ethereum, are currently garnering a lot of developer attention. Now, each of these definitely deserves its own video, but I wanted to make sure I made mention of scalable payments as a part of DeFi and as a potential passive income opportunity. You could, for example, set up a Lightning Network node and receive a small amount of passive income from that. Now, moving along, another aspect of DeFi that is worth mentioning is stablecoins. Of course, the question that comes about is, how do you make passive income from an asset that is designed to be stable in valuation? The way I answer a question like that is not to look at stablecoins themselves, but to instead look at what a well-matured, provably solvent stablecoin can do for the entire ecosystem. If we can trust that a stablecoin is pegged to the US dollar, for example, and that it's going to retain that value 99% of the time, that enables you to have many of the more complex mechanisms we're going to talk about in a little bit. I think the only thing I want to mention here is that stablecoins have come a long way in the past year. And as of the time of making this video, Tether represents about 75% of the stablecoin market, whereas a year ago, it represented 100%. Am I anti-Tether? Not exactly, but I think it's significant to show that the stablecoin market has started to diversify. And with diversification and competition, we get innovation. So it's incredibly important to see that. And it's incredibly important to see coins like MakerDAO's DAI leading the charge of innovation. So now that we've set the stage with DeFi and covered some of the more important aspects of it, we can see that there's several options already available for generating passive income using DeFi. The first is financial services. So Celsius Network and BlockFi are a new kind of financial service. They offer loans backed by crypto as collateral. What's really interesting is that they pay you interest for your crypto. So if you want to earn interest, you send them your coins. Celsius pays interest after 1 week, BlockFi after 1 month, and both in the deposited currency. They earn interest by lending out your crypto to margin and short traders and pass a part of the interest they earn back to you. If you lend them stablecoins, they will lend those coins out to other users who take a loan. We also have DeFi lending services. Players like Compound and Dharma have come to the market and offer a decentralized way for lending your crypto and earning interest. These services offer a borrowing and lending market based on smart contracts running off Ethereum. The interest rate which is paid is determined by a bid and ask. If you want to earn interest, you send your crypto to their smart contract via their app interface and become a lender that way. On the other side, there are borrowers which add collateral to the contract and then are allowed to borrow your crypto. Usually they do this for margin or short trading. In the case of Compound, interest is paid after each Ethereum block, and interest is paid in the same currency that you lent. We also have lending bot services. This is where you might see something like Crypto Lend or Coin Lend, which offer automated lending to margin and short traders on exchanges like Bitfinex and Poloniex. You don't need to have technical knowledge about how to use the bots or know anything about lending to traders. You just send your crypto to the exchanges and the bot does the rest. You will need to create specific API keys on the exchanges which the bot uses for the lending. Those keys are limited to lending only and don't grant the right to exchange or withdraw, so it seems to be a safe solution. Next, I want to look at interest exchange programs. Some exchanges offer interest programs to attract new users. Usually they pay a pretty good rate. One example is Bitrue, which currently offers interest programs for XRP and some stablecoins. If you want to earn interest, you send your coins to their exchange and add them manually to the interest program. Interest is paid daily in the same currency like the deposited coins. BitTrue earns the paid interest by lending the coins to margin and short traders on their exchange. So those are the main ways I would look at passive income in the context of decentralized finance. You're going to have other passive income or slightly active income streams as you look around more into DeFi. For example, there's crypto reward programs. One such example is Brave, which is a privacy-focused browser which removes all the ads and tracking scripts. But what's more interesting is that soon you'll be able to earn crypto by watching ads. The ads will be displayed in the browser tab based on your browsing activity. The ads feature is currently in beta and will be released later this year. Another great example is Lolly. Lolly rewards you with Bitcoin if you purchase goods from their partner retailers. So these are just some of the ways that I've been looking at making passive income with decentralized finance. The great thing is that decentralized finance, or DeFi, is definitely up and coming. Not to mention, I think DeFi is going to play a very important role for how crypto evolves in the future. At Ready Set Crypto, we focus on what we feel are the three pillars of the digital economy of the future: crypto, security tokens, and DeFi. The combination of all three is going to pave the way for the new digital economy that we feel is going to be more representative and more democratized for the average person. To capitalize on what I feel is the macro trend in 2019, I'm offering my new DeFi class starting today, which will cover more opportunities about how to get involved with DeFi, as well as many more opportunities to find profit in DeFi. Furthermore, the class comes bundled with my extremely popular security token class. So if you're interested, head over to readysetcrypto.com/DeFi to join the class, or join our exclusive Omnia membership and get access to all of our classes, our newsletter, our portfolio, and our private Discord for a price that's cheaper than the class. So I hope you join us, and together we'll find some awesome opportunities going forward. But I want to hear what you think. What do you think about DeFi? What do you think about the different ways to make passive income with decentralized finance and the different ways that the crypto industry is evolving? Let me know your thoughts in the comments below. And thanks so much for watching. I really appreciate it. I'll see you guys in the next one. Cheers.